I think the reason we are stuck in the range, Dan, is basically you've got OPEC on one side that is protecting effectively the floor, but then you've also got the US government on the other side, which is um, threatening SPR releases or easing sanctions as soon as oil prices go above $90. So you've got both of that, and that's why prices are prices are effectively stuck in the middle. And I think one of the challenges we have is, I mean, our price forecast has been $85 for Brent this year, and we've had that price forecast since October, is that even though we are bullish this summer, we've been calling for a bullish summer and prices to like Brent to trade above 90. Overall, though, we are very stuck in this range, and I just don't see how we're going to break out of it with kind of some very strong caps and floors on both sides anytime soon.
It's interesting because the EIA is pretty much in line with you. They say Brent is going to be around 89 USD in the second half, and that's based mainly on declining inventories. But that assumption, that forecast, also relies on OPEC Plus maintaining cuts. And I'm wondering what the view is inside OPEC right now. Is it going to be able to maintain this level of production, maintain these cuts through the second half of the year, or is there something that could disrupt that scenario?
Well, look, I'd say you know this as well as I do, right? I think the Prince Abdulaziz has been very, very clear in saying if the market doesn't warrant the increases, he will not do it, right? I think that's the one thing. We are projecting inventories to draw down about 2 million barrels per day. I do think some of these unplanned issues that are going on right now are tightening the market. We had Hurricane Beryl. Yes, there was no damage to infrastructure, but what I want to highlight is that such an early hurricane season, if you even get precautionary shut-ins like we did from Shell, say 75,000 barrels per day for about 5-6 days, every hurricane, if that happens, it's going to add up, right? It doesn't matter if there's a damage or not. Wildfires in Canada, again, early and some big numbers shut in about 400,000 barrels per day overall, the impact, even though, I mean, shut-ins might be about 300, a little bit more. And then you've got the Middle Eastern heat waves. I mean, you're in it. We are seeing OPEC exports down 1.3 million barrels per day month on month in June because of the heat wave, because you've just had more power demand regionally. So I think these things are tightening the market more than anybody would have expected. So might give OPEC a bit more leeway in Q4 if the starting point for any of these inventory builds in Q4 ends up being much, much lower, then they can add a little bit without causing prices to fall.